HSBC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
To the moon, to the moon, to the moon. We're so back. I'm telling you guys, we're bottomed. We're bottomed.
It is Tuesday, January 13th. You heard it here first. This is the start of the next crypto bull market.
I just bought uranium. Dude, so that book that I was reading about the rise of America, I picked it up in 2020 from old mentor Mr. G, and uranium was literally trading at $9 in the ETF. It's at $51, and I just completely got rugged, and I did not. If I had bought uranium after I sold crypto in 21, I would have bought it at $18 like silver and gold, and of course I didn't. So now we're here. We're buying uranium at $51, long-term part of the portfolio. But man, I'm fully back. I'm reallocated. I'm in. I'm ready to go. I'm scared.
When you see, like, you know, we obviously have a sweeping rising tide across the entire industry. Bitcoin is up to 94.
Yep.
ETH is up. BNB, everything, right? The majors all the way down. And then there's some secular things that are up a lot. You know, I look at that and then I try to rationalize, but there's so many factors that are all fitting and converging and all leading to this. The uprising in metals, now shifting, New Year, you know, Happy New Year, you know, end of year selling, now that's coming off. Michael and Vance came on, the BitMine call option Tom Lee pay package. How much do you pay attention to just like any one thing that's going on out there, or are you still like TA god, technical analysis guy? You're just looking at flows.
Dude, I was trying to be bearish. Just bought more Canton DAT there today. Sold silver to buy that. What's up, man? I feel you, man. Man, I was trying my hardest to hold on and to be bearish and just to like let this thing simmer out. But like first we got, what was it? Last week we got Trump taking over Venezuela. That was like, holy crap. I need to be holding I need to be holding sovereign hard money in my portfolio. Like I can't be, this is ridiculous. Gold, and then you had gold and silver just making new all-time highs the last couple of days. Then you've got Trump going at the Fed chair Powell, which is just like, wow. Like that is also just an insane, thing to do.
Let's pause on that one real quick. Banks, forecasting agencies, sentiment is now that there will be less rate cuts or less aggressive rate cuts to start 2026. For instance, we're now pricing the January meeting at 95% no change. There's no meeting in February. In March, the Fed decision is also 71% no change, whereas before it was closer to 50-50 between no change and a cut. So why is Trump going after the Fed chair bullish?
Dude, because it's like all rules are off. Like it's just Trump is literally trying to force his way into lower rates. Like they're buying $200 billion of mortgage-backed securities. They're trying to lower rates. The oil prices that Trump's saying that they're going to do everything that they can to keep oil down, inflation down. They're literally just trying to do everything they can to pump assets. And all of these correspond with the fiat debasement trade. Like, it is all so clear. And like, to be honest, every time I've sold crypto to buy other fiat debasement assets, what has happened is I've just underperformed crypto for a certain amount of time. Like when I sold my crypto in 21 and bought gold, silver, and that house, I literally have underperformed Bitcoin since then by like a margin. Like, I don't know, let's say Bitcoin, I sold it around 60, 70.
Selling Bitcoin in 21 and buying gold, you've underperformed Bitcoin since 21?
No. And so if like for the longest time, you felt like you shouldn't have sold the Bitcoin, like you should have, like you underperformed. Why would you allocate to other assets? Why not just stick to your biggest, your best idea? And then, yeah, gold goes on a generational run. And it's at 4,600 right now. Silver's at 87. I bought like maybe, I don't even know, like 10 grand worth of silver, like such a small amount at like $20. So, I mean, maybe it's at like 40 or 50 grand right now of silver. Great. Same with gold. I bought quite a bit more, maybe like 25K around like that 1,700 mark. So what, maybe that's at like 75K. So maybe I've got like 100K of metals and it's like, great, like awesome. But like I just, had I bought like 3x more gold and silver, it would be like kind of an insane part of the portfolio. And so I guess all I'm trying to say is that the fiat debasement trade just keeps working, and I'm just going to keep slamming it until it doesn't. And like, obviously you have to be able to manage the emotions and manage the, things do get out of hand. And so there is a reason to like hold cash, but man, it's right now, everything is just like changed in such a way in the macro landscape that it's just hard to not want to just be heavily allocated to basically anything that's going to debase, anything that's going to prevent the debasement of fiat, in addition to just the craziness that is this regime.
And if you read Arthur, and we do, and I like his writings, and I think he's one of the smarter macro analysts out there. Yeah. And he also makes it real easy for us because he applies macro to crypto. There's a lot of macro analysts. Not a lot of macro analysts are applying their research directly to crypto. Arthur does a really good job of it.
Yep.
You realize that the only reason to hold fiat is when a politician is running on a platform of austerity, which Trump was early in his presidency.
But he's no longer, man. He is
no, of course not. Of course not. Liberation Day and tariffs and cutting the fat, cutting the corruption, all of that was as much austerity as we were going to get. They wanted to cut some spending. We're past that now. Him and Elon had the falling out. That was the end of austerity. So now, once you get past that, all of it is debasement. Then it becomes a question of outperformance, which is what I think is a more enriching and interesting conversation, is where we go from here. We have metals, we have equities, we have crypto. And then even within crypto, we have, large caps, Bitcoin and ETH, and we have mids and small caps.
Yep.
And so I think we've seen metals outperform up until this point. Equities, I believe, are next. I think once equities break out of this, S&P is tapping on the door of 7,000. I think equities are, and we're already seeing it in some of the private markets, M&A in general, not just crypto M&A, but M&A in general is way, way up. I expect equities to do quite well. And ultimately, I do believe we're going to end up seeing crypto do well as well. So if it's a question of outperformance,
Yeah.
I would imagine that the metals outperformance is sort of the beginning of the end. Maybe it has a blow off top with gold and silver. And you even see that because you're getting into the more esoteric metals. Palladium, copper are doing really, really well. I would anticipate that that asset class outperformance will transition first to equities and then crypto. And it's not that crypto is not going to do well. I think actually Bitcoin and ETH, we're seeing it today, are outperforming fiat and they're up. And I think we do rally upwards of 100, if not 105, 106. Do we get all the way back to 120, 125? Not until we see the full rotation, in my opinion. I think what we're seeing right now in crypto is pure disbelief. I think the market was so apathetic for so long. They're not just coming up and saying it's we're going straight back to all-time highs. I think that is still a bit contrarian. We're actually going to see a bit of chop upwards, in my opinion. As equities do well and the rally in gold and silver dies, it kind of tails off a little bit. Then we get the full rotation and we rally beyond all-time highs.
STE says WPLS on Dexstream. Look into it. It sounds scammy. I just bought gold, silver as part of a diversified portfolio allocation. Have been selling bits of that now, just like I sold BTC when it gets above the allocation. Look, I think that's the right way to think about it. And that's how I'm kind of like running my portfolio right now, right? Like, let's say you want to have certain amounts of assets in, 40% Bitcoin, 20% metals, 20% equities, 20% cash. I think that's kind of the way that you want to kind of think about the portfolio when it comes to the debasement trade. And then, like when one gets to be a lot, you just kind of, or over your number, you just rebalance it back into the other platform. So guys, let's hop into the news that we have to cover. We got a ton of stuff to go over today. DC's running hot. It's crypto M&A season as well. CoinGecko with a $500 million potential exit coming and more. So guys, let's hop right into our just general overview of what's happening in the news.
Obviously, big week in DC as well. Writing code is not the same as controlling money, and developers who build blockchain infrastructure without touching user funds shouldn't be treated like banks.
Okay, so this is like Roman storm coded, like Tornado Cash, like code is law, and it's not the same as controlling money, and they should not be treated like banks. I totally agree. I mean, Senator Lummis, would love to have you on the pod. This is like completely accurate. There is absolutely no way in which developers should be, effectively given the same level of consequence as somebody who's doing fraudulent custodial activity. I think it's very clear that smart contracts have this immutable property in which you create a contract, people interact with it permissionlessly. It is not, once you set it off into the wild, in most cases, given there are some admin keys, there are some kind of small things that can be changed in the type of smart contract. And that's the nuance that needs to be happening in these conversations, which is hard to have happen when, frankly, the folks that are writing the legislation don't understand what a smart contract is.
Well,
and
that's an education gap that we're trying to solve here.
Yeah. I mean, look, at the end of the day, if you are creating immutable smart contracts, you should not be held liable for the activity within that smart contract, given that you are not maliciously interfering with the activity once created. I think,
if you want to take the counter argument here is, obviously there are tools that are out there online and in multiple sectors of the economy that are used for illicit purposes. We all hear, the argument when it comes to cash and Bitcoin for that matter. But the more recent one has been Tether. You've seen, they're freezing large amounts of Tether because they believe this is tied to the Iran movement. There's sanctions on a lot of countries, and they're using Tether in order to circumvent those sanctions. And Tether has gone and they're starting to freeze some of that capital so that it cannot be used for illicit purposes. So I think the differentiation here is how hands-on or hands-off some of these founders are and some of these companies are. Are you putting a piece of software out there, or are you running a financial institution? Tether is a financial institution. I think Tornado Cash and Roman Storm, and these guys are
Hey, Alex, can you hear
running
me?
pieces of code. These two are not the same.
Nice.
If you're responsible for maintaining compliance, and this is where it is such a gray zone. And look, if we had some clear black and white regulation, we would say, yes, you have to be compliant. You have to be responsible that your software is not able to be used for illicit purposes.
Yeah, of course.
If that was the regulation, so be it. You could go operate in a different jurisdiction and release your code elsewhere.
Right.
But if you have regulation,
this is a night and day.
that says, no, you don't have, you can release anything into the wild and then let that thing permeate through both the economy and the digital online web, World Wide Web.
Yeah, no, it looks really,
then
really
so
good.
be it. But
Honestly,
that's
great.
black and that's white. Right now, it's still this gray zone. We still don't have clear regulation. Until we have clear rules of the road, we're going to continue running into these very confusing roadblocks where some things are thought of some ways, other people think of them other ways, but there's no clear definitions. That's what we need our government to do. Otherwise, why are people in Congress? Why are they in the Senate if they're not writing the definitions so that there is no confusion?
I agree, man. I agree. All right, guys, let's move on from the politics. We love you, Senator.
I think we're going to come back.
Cynthia.
There's more politics here towards the end. Obviously, a big week in D.C. with market structure.
We're not moving off the politics. We got Eleanor, our lovely D.C. correspondent, the #1 D.C. correspondent in crypto right now, Eleanor Tourette. New bye-bye doing markups per Chairman John Boozman. The Senate AG committee is punting its markup on crypto market structure to the last week in January instead of holding it as originally planned on Thursday, the same time as the Senate Bank Committee. Boozman cites more time needed to maintain bipartisan support. Guys, if you recall last week on the show, we talked about this. We anticipated that this would be postponed. We understand that this is a kind of drawn out process that's going to keep happening. If you're not following Eleanor, she's the #1 person to watch in this space. I love her content. Rob, what's your take on the crypto market structure legislation? Have you done your research? Where are we at with this?
So there was a draft. It was a 278-page draft. I think if you scroll down a little bit here, there is a little bit that we can talk about. And so obviously Boozman, he says he remains committed to advancing bipartisan crypto market structure legislation. They have made meaningful progress, and we will get into that a little bit later. And they have had constructive discussions as they work toward this goal. Boozman says, I appreciate the leadership engagement of Senator Booker and his team as we address these complex policy issues. To finalize the remaining details and ensure broad support, this legislation requires additional time. Before moving to market, committee will mark up this legislation during the last week of January. So this is not a vote. But they are moving forward. And so, actually, let's scroll down. What is Eleanor's take? This is bad? Not really. The bill needs Democratic votes to pass the full Senate, or it's essentially dead on arrival. With only 53 GOP senators, Senate rules require 60 votes, 3/5 majority to reach closure. Boozman and Booker are likely weighing a higher chance of clearing the Senate. So what they're doing here is they believe they don't have the votes, which is why they're postponing this. We can scroll back up. And so what they're doing is they're allowing more time. Do they need additional time to read the draft and mark it up and actually look at the no?
It's total politics.
More time to play politics. There's going to be concessions on Venezuela and Greenland and Iran and healthcare, and they need time to assess what these people really want. Do they want more oil from Venezuela, or do they want more healthcare to the aging population? They need to put up concessions so that then they can go back and they can mark this up, as they know they will get the votes because they made the appropriate concessions beforehand.
Yeah, man.
They shouldn't move this to a vote until they're sure that it will pass.
Man, politics is so funny, man. I mean, look, they're going to mark this up more in the last week of January. Our take here is that, and this is kind of comes from Vance and Mike from Framework, and maybe another person or two that we had on the show previously, where, look, guys, if they get this thing through before the new Congress, before the midterms, I think we're going to be in a really good spot. That's like 8 months away, 9 months away. And so we have time. You'd be shocked as to how long these processes take in the U.S. judicial system and the legislative system. But the end of the day, we're going to see this come through. I'm pretty confident on it.
How soon do you think that next step will be?
I don't know what the
I'm just
ramifications of this
curious.
are going to be. I did see that the banks got a win in some of the Genius Act and Clarity Act markups, actually, where stablecoin yield is actually not going to be able to be passed back to users quite yet, or at least that's where they're trending towards in specific instances. Meaning, like, if you're just holding your stablecoins in a wallet, you're not, or in your account, without depositing it into some lending market or somewhere where you actually take some sort of like material risk for like using that stablecoin, then you're not going to be able to get the yield. Now that is just currently what I'm seeing. I'm not sure where that trends to, but something to note, because if we get a world where banks are subject to the rule that stablecoin issuers can pass back yield directly to their users from treasury bills.
I mean, I feel comfortable.
Banks are literally so fucked. Like, they are literally cooked, because the bank right now gives you a tiny minimal interest rate. It gives you like barely anything, and you don't get the ability to actually move your assets 24/7 and have this kind of ownership over them like you do with stablecoins. And so that is something that I think is particularly interesting. I've seen a bit of chatter about it, but not enough. I think that really getting a big win there for stablecoin issuers would really flip the dynamic with banks on their heads, I think.
And let's move to another Eleanor tweet. Leo, we're going to go out of order a little bit, so let's jump to the end. Eleanor and Paul Barron had a couple of good tweets about this as well while we're on this market structure topic. But Andy, I want to comment on something that you mentioned, which is that there are stable coins
periodically looking at the live room.
The banking system is cooked, right? And so we know this, and this is part of the neo-finance thesis that we've been building. Obviously, right now, you have your money in a savings account.
That I know, if it's helpful to you guys,
a quarter of a basis point.
I'm not going to just recommend him
on the high end.
You guys are full.
And so
just
we know that there are sustainable, reasonable places to earn yield, put your money, stash it away,
professionally. So
get 4 or 5%.
Maybe there's
especially when the federal funds rate is what it is today.
Yep.
We believe not just regulation, but innovation is pushing legacy finance to innovate. So that means that Coinbase, Aave, Morpho, these lending markets, places where you can sustainably get, a 0.5% yield on your assets. We believe this is forcing banks to come to the negotiation table and realize that they're going to have to make some changes. This is part of the neo-finance thesis.
So bullish.
And we believe that legacy finance is about to get an upgrade. It is going to be the neo-finance upgrade. And this is where a lot of crypto and on-chain companies have a head start. And so they're skating to where the puck is going. We believe legacy finance will try to catch up. Regulation is the final straw that breaks the camel's back and forces these banks to come to the negotiation table. They may have gotten a win in this initial draft. We'll see if it sticks around.
But
ultimately, this is going to continue to develop. And we're seeing that they are making some internal research and developments in order to cope with the onslaught of innovation that they're facing from the crypto industry. And so they're already starting to experiment with stable coins. We know JP Morgan is experimenting with their internal blockchain-based systems. These guys are working on these things internally so that when they are forced and the regulation ultimately comes about, they're not caught flat-footed, and they've already had a program in place. All they have to do is turn it on. But they're going to be fighting tooth and nail to the very end.
Definitely. Definitely.
Leo, let's go to the rest of the market structure. I believe Eleanor had another tweet. Also, Paul Barron had another tweet here that we'll go through.
I'm excited to see that you guys are.
Yeah, man. I mean, look, this is all really, really good. Especially I mean, like we've been waiting for this. This is what this new regime allows.
Small little niche.
So,
and it's like
I think
being redirected.
This is kind of also just part of the growing up of the industry, and it's coming and it's happening, and we're making it happen directly in real time as we speak. And so, guys, I mean, if you're a believer in this industry, that all of this market structure, political kind of work, it can probably feel boring. It can probably feel like, I don't know, there's not much going on to pay attention to for you. It doesn't really affect you, but I think it does. And I think that having your ear on the ground to this here on Rollup TV and just in general on X, I think it's going to help you manage your portfolio, stay in the loop, and just get an understanding as to where things are at.
As we're cycling through here, so I did take the 278-page draft. I ran it through chat, and I asked chat to extract some of the key points here. Obviously, so let's take a look. So we know that we're looking to establish a clear regulatory framework for digital assets across the SEC, CFTC, and Treasury and banking regulators. That is the core purpose of the bill. Also in this bill, it explicitly limits central bank digital currency use for monetary policy. So we have provisions against CBDCs. One of the most important things here, aside from laying out a taxonomy and really understanding the definitions
Marcelo, I hope
here,
you become super rich and successful.
it lays out this framework for network tokens, okay? And it separates these from securities. And so it says network tokens are treated as non-securities if they are intrinsically linked to a distributed ledger system. That means, again, how distributed, how decentralized. The second point is network tokens are not securities if they derive value primarily from network use and decentralized participation, not issuer control. That means that a lot of these neo-finance yield coins that are issued as stable coins and their main purpose is to issue yield back to token holders. These could be considered securities. Again, it's not, especially now that we have a more friendly regulatory environment at the SEC in particular, it's okay to be a security.
Yeah.
Bitcoin, ETH, a lot, and we'll get into like the ETFs that have their own coins associated with them. They don't want to be securities because they've been operating as commodities for a long time.
Right.
Also, a lot of them, their early distribution schedule, it's important that they did not conduct an illegal securities sale when they did their initial ICO. So it's important that a lot of these companies and these coins are
been a crazy
that they are seen as commodities, but the neo-finance yield coin landscape, it's okay that they are not it's okay that they are securities, because ultimately a security, what is it? It's meant to be a very safe vehicle that you can earn a secured yield on top of. So okay. So
yeah, man, look, I think that the overall like market for what these things are is going to keep changing and evolving. This year is kind of the year that these things are going to get discovered.
We still have to in and get
and
all
so
the gear and like
what they are is significant for the issuers, and we have Ondo here,
and like having our
and
own
what they are is not so much significant for us speculators, investors necessarily as much. Now perhaps there's some different like tax criteria.
I know even
things,
Broderick
but,
offered
this is really important for the teams that are building in the space.
We're not total novices,
and growing and trying to grow their product and understanding what their regulatory bounds are.
I know
it has been a crazy past few months. We got Ondo, global markets making history. Today we saw multiple $1 million on-chain stock trades.
Learn what everything does and how to actually
$1 million Google buys, 400K NVIDIA trades, and 6-figure flows into ADBE and SLVON. 7-figure trades are becoming the norm on Ondo's tokenized stock platform. So yeah, I mean, pretty awesome to see this happen. And yeah, I mean, we know that Ondo is one of the leaders in tokenizing equities. We know that this is going to keep happening. So I know that tokenized equities are going to work because I know that when I go on my Schwab account and do trades, it is just so much different. Guys, one sec, bear with us on the background.
Tokenized equities are going to do well.
Yeah, like what I was trying to say is I know that tokenized equities are going to do well because when I go on Schwab and I trade, there's a 1-day settlement time for trades. Transferring trades is really annoying. The actual whole process of managing the swaps and the fees, there's a lot of education that's required. It's just there's so much kind of nonsense with using traditional finance platforms and legacy finance brokerages. So it makes sense that tokenized equities will grow. And it makes sense that, Ondo is going to keep kind of dominating this sector.
The last point that I think is important on this is that as on-chain capital grows in size, we know that liquidity begets more liquidity. And so there is a critical mass in which the amount of value on chain surpasses the amount of value off chain. And all we have to do is get to 50% of the value. You'll hear a lot of people come on the show and say that all value, all money will be on chain.
I think they're trying,
and I think they're right, but it's not that we have to go for all of it all at once. All we have to do is keep chipping away and get to about 50%. And once that happens, you'll realize that you'll get a lot more inbound. Like we won't have to go out into the legacy financial world anymore and try to bring it on chain. Legacy finance will come to us because it'll be more efficient. There will be better pricing. It will just be cheaper, better, faster. Once we reach a certain inflection point, and we're already starting to hit that in some critical markets. We're seeing that on perps. I believe that equities will reach that point. And so again, the reason that we're here now is because there were some really, really deeply convicted people that built this from the early days. It's extreme. It is so much easier to be bullish on the space now that we've breached we've got
a critical mass, man. I agree.
We've got a critical mass. We've gotten off of zero. It is so much easier to be bullish on-chain capital markets now and be bullish neo finance now.
All right, guys, let's move on from Ondo. Shout out to them. They're doing great work. Stoked for them to keep growing. I'm glad that they had some big trades. There's a lot of equity demand right now for trading in the overall market. So don't be a panicking. I think he's missing an I in there. Panician. Don't be a Panician. Stay engaged and trust the process. Clarity is near, guys. So again, just the White House is signaling that there is Clarity Act is coming. Guys, take it easy, relax. It's happening. Stay bullish, stay engaged, trust the process. Again, our goal from the roll-up is to get this thing done by the midterms because it's highly likely, like if you go on Polymarket and you look at midterms, it's looking really strong that the Democrats are gonna. There's a 35% chance that the Democrats sweep the 2026 midterm. There's a 79% chance that the Democrats win the House of Representatives, and so it's looking pretty rough for the Republicans in the midterms, and they have a lot more leverage right now in this market navigating it than they do in other like basically they have a lot more leverage right now the Republicans do because they're in power to get this thing done than they will in 2027 or after this new Congress is in and this new House is in because then basically the Democrats will want to be pushing a lot of consumer protection things and will have far more power over this. So look, I'm not worried, but I want this thing to be done by the midterm year.
There's one more thing as you were rattling off some prediction market odds for the midterms.
Yeah.
The other thing that's happening, I think it's next week, is that the Supreme Court has a ruling on whether or not America has to pay tariffs back to the countries that paid them. I think it's a 73% chance Supreme Court rules against Trump and says, yes, America does have to pay these back. The reason that it was illegal.
No way.
I mean, we can double check those odds, but I'm pretty sure that's the last that I saw. Supreme Court tariff.
Traders pricing trouble for Trump's tariffs on Kalshi.
Yeah. 73% in favor.
Wow, 32% in favor of Trump on Kalshi for with $3 million of volume. Will the Supreme Court rule in favor of Trump's tariffs?
Yeah. So I don't know how this is going to affect markets. Obviously, the market is expecting this to not go through. The Supreme Court on tariffs is tomorrow. It's tomorrow. I thought.
Well, here's the way to think about it. Remember when they did launch tariffs and everyone was like, "This is terrible." Like the market nuked so hard on Liberation Day. Trump did that poster thing. He was like, "Wow, this is gonna, we're America the Great again." And then it kind of just got walked back, and it got walked back slowly and slowly and slowly, and the whole market collapsed, and people globally were like freaking out. I mean, look, man.
I've got a little bit of a different take. I think if they rule that he has to pay back the money, I think he has to pay back the money. Otherwise, it's unconstitutional. It goes against the Supreme Court, and there's a whole political fallout as a result of that. One reason why we may be seeing the markets do particularly well today with this ruling tomorrow is going back to the debasement trade. If they have to pay back upwards of like hundreds of billions of dollars, I think it's like 180 or 160 billion dollars.
Yep.
Wouldn't it make sense to just kind of inflate that away? Just
what
to kind of like
inflate it away.
Like they have to pay it back. I don't know what kind of timetable, whether it's this year, next year, what kind of timetable they have to pay it back between. But if they have a hard, you have to pay back $175 billion. Okay. What if we print $175 billion out of thin air, and that is what we pay to these countries? They get their 175 billion. We're free and clear. We're totally constitutional. We paid back all the tariffs. We collected the money. You made us pay it back. We paid it back. We inflated and debased the dollar as a way of doing that and making it less painful for us.
Yeah.
Right.
Yeah. Yeah. So, well, look, we'll see where we get on the tariff stuff
obviously
tomorrow.
the debasement and the money printing is going to do well on the markets.
Yeah, I think it's actually Thursday. Or is it tomorrow?
I think it's this week.
Yeah, it is this week. All right, guys, let's move on here into some Neo Finance work here. Really stoked to cover some of this. Number one being stablecoins. It's been a turning point for stablecoins. Stablecoin supply has grown 33% over the past year to 307 billion. We're expecting a 50% plus year-over-year growth this year. I mean, guys, we got custom stablecoins. I mean, this is it. This is full on Neo Finance. It's going to happen. Stablecoins are a massive part of this sector and of this category. Cannot ignore them anymore. The global financial system cannot ignore them anymore. We're at 300 billion. We're going to get to 400 to 500 billion this year. I firmly believe Tether and Circle, if not just Tether and then both, will be at $1 trillion of supply each by the end of this decade. So that's 4 years away. I think that's like a chip shot. I think it could be higher. I mean, look at this chart, right, guys? Like, this is insane. I mean, this is it. So this is the best chart in crypto right now. Unironically, the best chart in crypto is.
How do you bet on this chart?
You buy Circle stock. You buy Sky.
Yeah.
You buy token.
Look, I think there's a whole, just back to the point earlier about this rotation, from metals to equities to crypto.
Yeah.
I think there's a way to play that rotation with getting crypto equities, right? And allowing that they're almost a category in and of themselves. And I think that is a category to pay attention to, because you're right. A lot of this is happening off chain. It's happening in public markets, but it's crypto companies on public markets. Those are the equities to pay attention to.
Yep. I mean, Circle is I haven't looked at that chart in a while. Let's pull it up on my computer real quick. Yeah. I mean, it's flattening out right now at 80. I was just surfing with their head of research here in Hawaii. It's basically back to IPO price. So it had that insane run. And then, dude, I mean, I don't know stocks that great, but man, Circle stock could be a move here.
What about Coinbase? Give us a little commentary on Coinbase.
Yeah, I'm still holding coin. Also looks like it could be bottoming, kind of just follows Bitcoin. It's lost its favor to Robinhood, man. It's the thing.
Robinhood is another neo finance equity.
Yeah,
and
it's
so
kind of lost its favor.
You've kind of got metals, tokenized metals, obviously in neo finance. You've got this wave of equities and crypto, and there's kind of this Venn diagram that you can draw around a certain subset of equities and subset of crypto, and that makes up the superset of finance, neo finance.
Yeah, 100%.
All right, let's keep going,
guys. Let's move over to Aerodrome. Aerodrome is preparing for their Ethereum launch. We'll go ahead and get that up. They are kind of crushing it right now. And their team goes at Uniswap's CEO and founder a lot. Alex does. Since launch, Aerodrome's all-time volume is more than every DEX on Base combined. And next quarter, Aero arrives on Ethereum with its biggest upgrades yet. All-time DEX volumes on Base is clearly all-time highs compared to the other platforms. Yeah, man. I mean, Aerodrome's crushing. They're a great example of the revenue meta. They're a great example of generating fees and building something that people actually want. I think that they're doing a great job. Their expansion to Ethereum should do well. They're one of the tokens that will be a beneficiary of this more sophisticated, financialized, DCF, price to sales ratio type of investment that's going to happen this year. And I think they still have some things to figure out with the Aero token, but it's looking pretty good.
Yeah. Not much more to add from me. I think Alex is a really smart guy. He's certainly provocative when it comes to the battle between Aerodrome and Uniswap. He goes at Hayden relentlessly, and I think Aero's doing a great job. So I will welcome them to Ethereum with open arms.
Beautiful. All right, guys, we got a couple more things to go over before the Polygon team is going to join up. We'll keep this thing rolling, kind of lightning mode here. More on the neo finance category. So neo finance is just going to keep growing. Yield stablecoins are absolutely expanding massively. This year we saw so much. We're going to flip over to yield stablecoins. They have record growth this year. 2025, 88 new major yield-bearing stablecoins launched in 2025.
Insane. And guys, if it's
insane.
A little confusing and hard to keep up with the neo finance category, because you'll hear us talk about yield coins, you'll hear us talk about equities, you'll hear us talking about lending and a lot of neo banks, and a lot of these things are kind of coming from different disparate parts of the industry. We're going to put together a market map that should help clarify a lot of these things. That's going to release sometime later this week or early next. So keep an eye out for the market map.
Yeah, I just think this is crazy, right? So this is effectively what you're looking at here is people saw Tether's business model. People were like, holy cow, Tether made what, $20 billion of profits in 2025 or something, or 13 billion in 2025, or was that 2024? So some over $10 billion they've made in like multiple consecutive years, I believe. And then they see Circle and they see everyone else, and everyone realizes that, wow, if I'm an issuer, I'm just going to be an absolute money printer. That's how this is going to work. And so what happens is you get this rush into issuing. And then now what's kind of grown out of this is that, sure, there's like a dozen stable coins, like yield coins, over $100 million of TVL. And then outside of that, it's pretty barren. And so you kind of get this like effect where you get this maximum saturation happening, and then it kind of pulls back and the market resets because, well, there's not going to be 88 winners in a category, obviously. And so that's kind of where we're at with the stablecoin issuer, yield-bearing stablecoins, yield coins market. And I expect it to kind of consolidate a bit more.
I'll tell you guys where I think this is still got some room to grow.
Yeah.
And that is in this. There's a subset of these yield coins that are looking at exogenous sources of yield, meaning that they're going outside of the crypto industry. They're looking, like, take USD AI, for example, going into the AI space, lending credit to AI compute companies, passing the yield from that credit back to the stablecoin token holders. That is an example of what we're talking about. Another one, Daylight, is going out. They're a true solar power energy company, selling solar panels, selling batteries in which you can store energy from the solar panels. They're a real revenue producing company. They're going to take that revenue, they're going to turn it into yield and pass it back to their token holders. There's several more examples of these companies. And so you've got this category within yield bearing stablecoins of exogenous sources of yield. They're going out and they're finding and bringing the yield back to the industry. And then there's another category within yield coins, which is the same DeFi flywheel that we've seen time and time again. They're basically using pool 2 emissions. They're inflating their token supply. They're passing their tokens back to you in the form of reward. That's not what we think is going to do well sustainably in 2026.
Agreed.
That is the old legacy DeFi.
100%.
We believe in neo finance, new DeFi, call it new fi. This is yield coins that are looking and bringing exogenous sources of yield back to token holders.
I love it. Exogenous sources of yield is based. All right, guys, let's move on. We got a couple more things just to rip through here before our lovely Polygon guests come on, talk about their massive acquisition. This next one's pretty comical, man. I mean, this is just
Former New York City Mayor Eric Adams is set to hold his first news conference since leaving office later today.
Do we have audio on this video?
Yes, we do. NYC's first ever commemorative coin launches today.
This lady's lips are hilarious.
We're going to continue to invest in making our city a safer city.
This launched at 9 p.m. yesterday. How long did it take for him to rug pull?
Dude, he rug pulled $3.4 million.
I think it was like within 30 minutes.
Leaving office later today.
Talking about this new crypto coin that will help combat anti-Semitism. Today, New York City is launching a new digital token called the New York City Token. Inspired by New York City's resilience, diversity,
so comical.
to become the
we can go to the next one.
We're going to continue
which is also
to
about this, I believe,
invest
talking
in making
about
our
how much
city
he
a safer
was able
city.
to rug pull. Like, who on his team said this was a
Former New York
look? If you're
Hayden
gonna launch a
Adams.
coin,
Adams is set to
if you're
hold
gonna
his
launch
first
Adams.
news conference since leaving office later
I
today.
doubt he works.
Yeah, I doubt it as well.
Let's move on to the next.
Yeah, I mean that's just like unprecedented levels of crime, and so I mean here it is. He's removed the entire liquidity pool as of his new meme coin. Total of $30.4 million scammed. Sick, man. This is it. Wake me up from this nightmare, Jeebus tweeted. Somebody was like, Thread Guy just moved to New York, and then Eric Adams rugged the meme coin. The hell's going on over there?
Yeah.
It's pretty bad, man.
I mean,
he did it in 30 minutes. He pulled all the liquidity.
People did not like him as a mayor. He had crime that followed him around toward the end of his mayorship. And then he just goes and he does this. He had a net worth of $2 million before this. He just doubled his net worth. More than doubled his net worth.
Well, he's kind of poor.
Minutes.
What the hell? Mayor Eric Adams is poor.
He wasn't insider trading like the rest of them.
All right, guys, we're gonna take a quick standby. We'll have the Polygon team join us.
I think we got a second. I think we got one or two more.
Yeah, we got like 3 or 4 more things. We'll rip it after. We got the Polygon guys. They're ready to fire up. So let's get them up. We'll take a quick break, Rob. Get you fired up. Get you centered in that cam there, bud.
I'm fired up, brother.
And get you going. All right, guys. We'll be right back.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to havachi.xyz to start trading today.
Alrighty, guys, welcome to Rollup TV. Mark, John, good to have you guys back from the Polygon side. Neil, the founder and CEO of CoinMe. Peter, the founder and CEO of Sequence. Guys, big news to talk about today. First and foremost, welcome to the show.
Thanks for having us.
It's a full house here today, Rob.
It certainly is. Well, we're celebrating because crypto M&A season is in full swing, and Polygon has some really exciting announcements that they're going to share with us around the acquisition of CoinMe and Sequence. Guys, congrats. I think this is a call for celebration.
Yeah, thanks. We're super stoked, obviously. I've known Polygon for a long time, so it's awesome to be here.
Most definitely. So Polygon Labs is officially becoming U.S. regulated for stablecoins with the acquisition of CoinMe and Sequence for $250 million. This follows the open money stack, which has been released last week and delivers 3 key components of the stack. Without further ado, I'll pass it to you, Mark. Kick us off. What is the importance of acquiring CoinMe and Sequence? Kind of give us a bit of the lore and reasoning here, and we'll go around the horn and get everyone's take.
Yeah, I think it really ties into the open money stack. And when you think of what the open money stack is, it really reflects our vision of how money is going to evolve over the next 10-ish years or so. And we wanted to make sure that when we announced open money stack, we could quickly follow this up with actually making it a reality. And 2 core components of making it a reality are bringing in the CoinMe teams and the Sequence teams. And reason for that, if we kind of back up on, what is the open money stack? I think that's kind of helpful context, right? So when we think of the open money stack, we think of like an open and integrated system that's going to allow money to be moved anywhere in the world, like instantly and reliably, and then be used, on chain, not necessarily needing to bring it back off chain. If you think of like how you do that today, you're basically taking like a chain like Polygon, and then you're taking like these different components, you're like stitching them together, and you've got to figure out like who you want to work with, what pricing is going to look like. It's actually really, really complicated. Anybody who you're like, hey, just use stablecoins, it's like not as easy as it sounds. Whole idea here is that we can actually develop one API that brings all of this to anyone who wants to move money globally. And so when you think of that, what's combined here is a chain in Polygon, the ability to on and off ramp from and to that chain, given CoinMe, the ability to have an account on a chain, which is obviously just a wallet through Sequence. And we also have take very seriously this idea of being open, right? And when we think of this openness, we expect there to be thousands of chains and definitely dozens of payments focused chains. This is something that we've been developing the ag layer on for a while, right, on the Polygon side of things. But when we think of that, we also want to make it really easy. And Sequence has developed a product called Trails, which is an intent-based product that really makes this cross-chain interaction really easy. So when you bring all of that into one product, one API that can be plugged in, now you can move money anywhere from any chain, anywhere in the world, and do that in a seamless way.
Yeah. John, I'm curious from your perspective, just to add on here, we talked about the 3 key components here from Mark: the physical cash, the digital fiat on and off ramps, wallet infra, and obviously this cross-chain orchestration piece through this intense layer. From your experience working, at Stripe and other kind of legacy finance companies pushing the global payments landscape forward, Why is this so important to Polygon? How does this further enable, from your perspective, this idea of onboarding a ton of new users, capital on chain, keeping it on chain, and really kind of bringing this into the real world, as a lot of us in our community have been hoping for quite a while?
Yeah, for sure. I think Mark really hit the nail on the head here. But from a product standpoint, Polygon is incredibly uniquely positioned to be able to build this stack up from the metal. We're one of the only players in this space now that actually started at the metal, at the settlement layer with the chain itself. And then as you start to layer these pieces of the stack on top of that, so the money movement side, which we're really getting an accelerant through CoinMe here from a regulated ramp standpoint, from a cash on and off ramp standpoint, from a financial services capability in terms of work we've already done around yield production from Vault Bridge, an interop with AgLayer, and then being able to add trails onto that from Sequence, and then sort of all the way up the layers from that towards checkout and treasury management. It's really tough to do this stuff. And traditionally, if you were going to do it, you had to sort of pick a middle layer to start at, and then you had to push outwards. And it was really tough. You were operating, kind of stacked into a 50 or 60 layer competitive environment. And it wasn't just bad for builders in the space. It was really bad for folks who were just trying to move money around, because it meant you had to go and integrate multiple different APIs. You had to go and work with different vendors. You had to negotiate over and over again. I don't know how deeply you've worked in the money movement space before, but every vendor relationship, no one wants to say their price, no one wants to say their integration path. And Polygon really has this opportunity through its existing relationships and now through its kind of technology roadmap to be able to provide sort of one interaction point for folks who are looking to move money, access money, benefit from money via the open money stack. And these acquisitions today are just going to give us a great accelerant and just a leap forward in our product catalog and roadmap to be able to deliver that for existing and new customers.
And I'd love to hear a little bit more about how this all came together. I'm sure Polygon has been working. Obviously, you guys have been working in the space for so long, but you've been working on the open money stack for a while as well. And so when it came to these partners, maybe Neil, we can start with you, and then we'll get to Peter. But how did this all come together? When did it make sense to ultimately partner up with Polygon? And generally, did you approach them? Did they approach you? How did this manifest into this acquisition today?
Yeah, we've been in the space for a long time now. We got started back in 2014, actually one of the first licensed crypto exchanges in the US. And since then have seen a lot of different regulatory environments and a lot of different use cases come and go. And when the Genius Act passed and we started seeing a thawing of a lot of the IPOs, it was very clear that over the next 24 months, call it, there's going to be the majority of deals are going to be signed. That's going to set the precedent for the next 10 years of finance. And from CoinMe, even though we've raised $40 million and have been able to generate a significant amount of volume and revenue as a standalone business, we had to go faster. And so we started looking for partners to be able to go faster. And that's where we ended up in this transaction with Polygon. We not only have the resources to do what we do, but a much greater scale, not only just in the US, but now on a global scale. We also are able to combine our services that our partners rely on with Sequence, with Polygon, and be able to offer them a complete solution. And that's extremely exciting, not only from the CoinMe perspective, but also for our partners. Our partners really build on us and rely on us for a lot of key services, not just physical cash on ramps and off ramps, debit card processing. If there's a custody flow, a settlement flow, liquidity, post-trade settlement, AML, compliance, KYC, all the nitty-gritty things that frankly builders just see as delays and headaches. They can now integrate with us in a simple way. We're adding capabilities to that, and now they can go faster because from their perspective, they're competing too. And we're their back-end customer to help them compete in now a more competitive market than ever. And so now you look at innovative fintechs and merchants and banks that are all looking at Web3 and going on chain. Now they can compete with CoinMe, Sequence, and Polygon.
Yep. And Peter, you guys at Sequence have been less on the physical side of things, more on the digital side of things, working on smart contract and routing infrastructure. How did it materialize? What was your perspective when it came to this partnership with Polygon?
Yeah, well said. I mean, I think, Sequence has always had a vision on how blockchains in the space would expand and evolve. And for us, it was clear that it would be made up of many, many blockchains. We knew it would scale from the earliest days of how is Ethereum going to scale at all, and how do you deliver great user experiences, and how do you solve problems around gas, and how do you do parallel transactions? How do you make it feel like the native internet that everyone's familiar with? These are always our goals, to accelerate the utility. If you think about Polygon POS or blockchains in general, they're like the hardware. So we're the software layer. We're the layer that sits on top of blockchain. So there's always a close relationship between the chain and the layer that we serve, which is really a modular set of on-chain building blocks as Sequence itself. And there's so many things, from wallet infrastructure to transaction delivery to real-time data querying and indexing to cross-chain intents, which is our latest product, Trails, which we're super stoked about. It's about always creating a unified developer experience so people can build really cool things, and then also be able to then transact on them and deliver amazing user experiences, and then ultimately allow them to build really robust businesses on there so they can monetize well. So although we have our own wallet, which we're all very focused on account abstraction, we've been, our company's been around since December 2017. It's been over 8 years. We have an amazing team of very experienced people who've been building even longer than that. A lot of deep things. We have a lot of EIPs behind our belt. So, that's kind of our background. I mean, I've also known Sandeep for quite some time. Obviously, a huge respect for the team and the group there, and Sandeep being a very prolific leader. Polygon POS has done $2 trillion of volume value transfer over their network, which is just phenomenal. And our indexer team knows damn well when we're indexing the chains, Polygon takes the longest indexes, has the most activity, literally, which is really funny. But yeah, so for us, it's very natural. I think the ag layer vision, I think the way you could see Sandeep and team thinking, and Mark and others thinking about, it's not one chain, it's all of the chains, it's all of the value layer. There's an ecosystem of chains here, and how do we connect them all and unify them? The ag layer spoke to me, obviously, because it's exactly the vision of Trails, and it's what makes sense as for the vision and the path that we're on. And of course, I'm also super stoked to work and collaborate with the broader team, like John and Mark and Neil and so many great people, and Mooted and others. But I always think a lot about internet native commerce, internet native finance, which was what crypto represents to me as the next generation rails for so many things that we're gonna be able to tap into. What I love OMS about is it's about Sequences, the crypto Legos, and then CoinMe and other things are the TradFi Legos. We connect them all together. We have the OMS, and we have something extremely competent and capable to just make everything seamless and easy. So pretty stoked.
Yeah. By the way, guys, we're calling this neo finance. This is kind of this convergence between legacy finance and DeFi. You'll see more of that from our side coming up. I think it's the term DeFi in of itself does not exactly represent what's happening, for example, here, and with a lot of the more interesting actual practical applications of blockchain in today's world. It's a lot of this kind of convergence happening, and we're placing a lot of our material focus, capital, and just efforts into this kind of cohort of projects, teams, and ideas. So very glad to have you guys on the yeah.
And neither does fintech and legacy fintech. Yeah. We believe this is an upgrade to the existing, the legacy finance system, the legacy crypto system. And you guys are a shining example of this. When I was first reading through the Open Money Stack and learning about this today, I was like, wow, is Polygon becoming a neobank? But the more that I think about it, this is bigger than just a bank. This is really an exhibition of neo finance in general, because it is open and it is a platform for all forms of money, through the vanilla payments all the way through to the most complex and esoteric forms of finance. And so kudos to you guys for leading the charge and really pioneering. When you're thinking ahead to, and in the Open Money Stack blog post, you guys laid out, this will serve as the foundation for the next 30 years of finance. If you guys are forward looking a bit, how do you think this is going to play out? What are some of the milestones over the next 30 years? Some of the key things to keep in mind as we evolve as an industry? Mark or John, feel free to take that one.
Yeah, I love this question. I think step number one is going to be, and it's probably the easiest one to answer, is that all money is going to be on chain. And that's really the core of Polygon's mission, is to make sure that all money moves on chain. Once that actually happens, we now have liberated ourselves from so many of the restrictions and constraints that currently exist. And I think that's going to be in lots of forms, right? So stablecoins is one form of that. I think tokenized deposits is going to be another form of that. I don't think it's just going to look like stablecoins, but ultimately we're going to have it all on chain. And once that actually exists, now we're no longer talking about like on-ramping and off-ramping as being necessities. They're going to be the rare things that we do. Over the next 10 years, I think there are going to be things that we're mostly going to be doing. When we get like 10 years out, we're actually rarely going to do that. And the key to that is going to be, and this is really core to the open money stack, and I think differentiated from a lot of others, is really doing something with your money when you're there. And John touched on this, the idea of like yield products. You also need to be able to like hold for, investment purposes, any products, which is where RWAs end up coming in. You need to be able to like trade anything as well. But you ultimately want to have a world in which people don't need to move off chain. And so if you fast forward, 30 years from now, or hopefully much sooner than that, you live in this world where money is just moving like incredibly fast. And when you want to move out of an investment, you're immediately moving out of an investment. You're going to have like identity that's going to be on chain that's going to allow you to do that. And this vision of like, I think what most people somewhere like deep down think of what, blockchain should become from a financial perspective will actually become that. And I think that payments is really the wedge to making that happen. You get in from that perspective. It's the thing that everybody needs every day. And then you expand from there into all the other use cases that people want.
Yeah, Neil, Peter, anything to add there?
Yeah, I think what's really cool about the stack is that it's not so much a consumer-facing application as it is a stack for a lot of the businesses that hold accounts with billions of consumers around the world. And by going direct to them with a turnkey offering, they're then able to very quickly, weeks, be able to render user experiences for their users that is on chain. And on chain, why do I care if I'm just a consumer and I'm maybe not a degen or a crypto enthusiast? Is really 24/7. It's your money, you should own it. It's also access to live in a multi-currency life where people outside the United States are able to maybe bank on the dollar, and or Bitcoin or Ethereum or Pol, right? And be able to have that multi-currency ability to live your life in a digital first way, I think is really exciting just from like the social economic impact that can have on global finance when you think about that from like a consumer perspective. But then you get into all these different use cases around gaming and real world assets and identity, and the stack can support all of that while money's the core focus. And if you can solve the money problem, you can solve all those other problems quite easily. It's really exciting to see, longer term what this can manifest into.
I'll say that I love your guys' term of neo-finance. It's exactly right. Another point I'll make is interesting because we've served developers who are looking to build on chain for a long time. And you can make the smoothest experience. You make the best wallet. You make the no gas. You can use any wallet. You do cross-chain, and then guess what? And then users show up and then like they can't onboard their fiat. They can't even spend any money because they don't have crypto. So like, in order for a business in this era of crypto and applications, there's so many great benefits, but there's still fragmentation. There's fragmentation with crypto, which has been introduced by so many chains, so many different tokens and so forth. But then there's fragmentation just around, geographies and different currencies globally, and how do you on-ramp again as well. So, for me, Sequence, of course, we've been focusing on the fragmentation problem is so wide and broad and known, but really it's just as bad on the other side, and then connecting it all together in the world of internet native finance or neo-finance, I think is a really important thing to solve, and it's a massive opportunity. And again, Polygon is extremely well positioned to take it.
Yeah. From my perspective, the real winners here are the end users. Like, this will significantly impact the user experience for the better as a result of unifying all of the experiences that you guys have built for customers over the years. John, I'm curious, maybe you could put that into more specific terms. How will this impact end users on Polygon, before and after? Maybe you could give us a sense of how the product may evolve here.
Yeah, 100%. The user experience is one of the primary goals here of building a unified stack. We've made reference in the past to how the internet really freed information, right? And the open money stack is going to free money. And I think the propagation of that and sort of the order of operations is actually quite similar. When the internet came about, it was obvious early on, like, why it was important for information to better flow between yourself and maybe someone in India or someone in a distant country. But it took a while before it actually made sense. How is the internet impacting my day-to-day life at home? How is it changing the way I interact with my neighbor? How is it changing the way I think about my friends, or I think about connecting with people day to day. And the same thing will sort of happen in the way that money starts to be advanced, in that tomorrow it will become easy and obvious for how you might move money internationally, or how you might get money into a foreign currency you couldn't think about before. But over time, it's going to hit you more at home day to day. What is my money doing for me, while it's sitting? And how is it doing that automatically? And how am I making decisions about that where I want to, or not making decisions, but benefiting from this network when I don't want to? And so I think in an ideal state, just like the internet really with Wi-Fi kind of started to fade into the background, we weren't dialing up anymore and making this intentional action to interact with it, I expect to see the open money stack in many cases fade into the background, and disappear behind the kinds of applications that you or I are used to interacting with day to day. You might go and make a payment somewhere, and the source of where that payment comes from, whether it's a DeFi source or a currency source or a bank source, can be completely irrelevant to you. And that decision can be made, because you have this interconnected stack. In the short term, that might look like decisions between, one of the amazing things that CoinMe brings us, right, is a cash on-ramp, a way to actually go and make a payment with cash where you otherwise couldn't. In the longer term, that can look more like DeFi or RWAs or lending, or other types of creative uses of money. Maybe these things even plug into, mega financial apps like Polymarket and what that's evolved into. So we really need to build those core commons through this stack to enable those kind of step function experiences with money that sort of change the way we think about it or don't have to think about it in our day-to-day. And so that's maybe like the very top level aspirational. And then kind of, working it down to an actual action. This has a lot to do with, how you make a payment intent and decision, right? And then how you think about the money that's at rest and how you plan for it in the future. And all of those little moments we go through day to day, so much of our day is actually wrapped in commerce, right? I think those are the places where the open money stack will just alleviate the overhead of thought in the same way that, Wi-Fi and the internet has alleviated the overhead of thinking about how I might send a message to my neighbor, which would still be over, right, text message today, or over Messenger or over any other internet service, versus walking next door, which in the early days of the internet made more sense. So I think aspirationally, that's where we're headed. And from an experience standpoint, a lot of this stuff really should disappear. And we keep, in crypto, we keep hoping that will happen. And we do that sort of at the layer, and we kind of wait for everyone else to build the solutions. The open money stack is really a statement here by Polygon that we are going to build those layers to actually enact this and allow it to happen, not just wait for everyone else to catch up and figure it out.
Yeah, one thing that I just want to add on to this is that when we were putting together the vision for the open money stack, one of the things that hit me is like the impact that we're going to make. So, I've been in crypto a long time, right? And everyone talks about like, changing the world and this and that. But frankly, like most of the time, I feel like it's total BS. Like I'm not like really into it, but like as we're writing this vision and like working through like the product and what it's going to look like, it's actually one of the first times in my lives that I sat there and I'm like, oh, we're like actually going to change the world. And we have this line in the open money stack vision that talks about changing the way people experience money. And I actually spent like a lot of time like reading that line and debating it. This idea of like the experience of money, because people don't really think about it as an experience, but it really is, right? Like our daily experiences are defined as some parts of them by how we're going to send money to people and how we're going to interact, whether it's for commerce purposes or sending money home or whatever else it might be. And if we can change what that looks like, and it turns from like a burden into something that, as John said, just fades into the background that you don't think about anymore, this is a huge win. And like it's not just, people think about this only on the consumer side, and it is very true, right? If you want to send money back home, a day, 2-day difference can actually make a very big difference. And like the ability to actually get it, like how do you get cash into crypto today? It's actually very difficult, but you think of from like an access perspective, the impact that it has when we're able to like leverage what CoinMe's built to actually let people get cash into crypto and send that back home. It's huge. But then you also think about it from a business perspective. Like a lot of what we think about is building something that's like, B2B and B2B2C and eventually, B2C. And there's people behind businesses, right? And like every time somebody needs to, stay at work late, because a payment didn't go through, or they need to like wait for something, or if they have to get in early to make a payment, that's actually like completely unnecessary. Like we should be able to like avoid that so that people can actually just like enjoy their lives and still get done everything that they wanted to, even faster than they did before. So anyway, that's a way of just saying that, like, I think whether it's across businesses or consumers, the really idea is that we can like change how people experience money completely.
Yeah. Mark, kind of following up on that, I saw some data from Blockworks recently with regards to Polygon transaction activity, as well as REV, which is like their kind of economic value measurement analytic point. And it's gone, quite exponential the last couple of weeks. What is that? People are attributing that to Polymarket. I think that it's more probably attributable to some of the payments flows. And then as a result of this open money stack acquisition here of CoinMe and Sequence, what kind of numbers are you expecting to put up in 2026 and 2027?
Yeah, so I think there's two sources for those transactions. One of them is definitely Polymarket. It's like fantastic to have one of the most successful, actually probably the most successful app in crypto on Polygon. And so I think that's really important. The second one is payments. And so when we pull up a Dune dashboard around payments and we look at what May of last year until today looks like, it literally is an up-only chart, and consistently 1 month beating out the next month in terms of volumes that applications are doing. And the really interesting thing is these are not just like it's payment applications. It's also like on the P2P side of things. It's also really interesting to see the types of transactions, right? A lot of smaller transactions being executed, right? And we're very controlled in this in terms of like excluding smart contracts and things like that. So we know that it's like true like payments, right? So that I think has been great. In terms of what we expect, the general idea here is that Polygon has the opportunity to replace current infrastructure that exists, right? Like when money moves on chain, what's not being used, right? And I think most importantly, Swift is the number one target there. Then you start getting to card networks on top of that, and opportunities to replace card networks. When you look at the market value that exists there, you're talking about somewhere close to $1 trillion of value between what Swift would be if you actually turn their revenue into actual market cap, and if you take those networks and you turn them into market cap. That $1 trillion of value right there is $1 trillion of value for the Polygon chain. And for the Pol token that can be taken. And that's not all going to exist on the chain itself, right? We very much believe, as I think Peter really touched on well, this multi-chain world. It's actually really cool, frankly, when we see all of this come together, which is Polygon's bet on this multi-chain world for a long time, with the ag layer being built out. And this will just accelerate with, CoinMe supporting, any type of chain, not just, Polygon. Same thing with Trails and the ag layer doing the same. But when we all look at, kind of bring together and aggregate those cross-chain flows along with everything on Polygon, we are truly looking at like trillions of dollars of value being created, especially as the economy just continues to grow. And from our perspective, that's growth in the Pol token, which is obviously where we focus our time and attention.
Yeah. Yep. All right, guys. Closing out, Neil. With the CoinMe side, 48 states operation, money transmitter licenses, compliance infra, custodio infra, physical fiat cash to crypto, 50,000 retail locations. What's on your roadmap here, first couple months into the end of the year for this collaboration? And same thing with you, Peter. What are you guys both most focused on to make an impact in the immediate term? Close us out here.
Yeah, well, we've got several large partnership announcements that are coming out over the next few months, and those partnerships are really driving unique use cases, leveraging the stack. So keep an eye out for those. We're excited to bring those to market and be supporting those partners on the back end. I'd say for us, it's really building out more of that payments roadmap, payment orchestration, opening up more regions, getting really better on the costs side of things, because there's always interchange fees and costs that always get passed down to consumer. We're doing a lot of innovation around how to bring those costs down, so that maybe using physical cash to buy a stable coin is actually cheaper than using a debit card. bar none. And we're able to do that and bring that to market. And then maybe using CoinMe for card processing is actually cheaper than using a traditional card processor. And we'll be bringing that to market as well. So not only is it on chain, it's actually about efficiencies. And as we all know, in this neo-finance world, there's a lot of efficiencies by building a blockchain internet first financial system. And those efficiencies will start showing up in these user experiences where people could care less that it's neo-finance or crypto or DeFi or on-chain. It's just cheaper, faster, and a better user experience. And that's what our roadmap is focused on.
Yep. And Peter, what's next for Sequence?
Yeah, so I'm not sure if you guys caught it, but we did launch an awesome product called Trails in December. So HPS trails.build. And it's a product that is focusing on transaction orchestration across any chain, any token, any wallet. You can show up with MetaMask even without using the new fancy 7702 thing. And you can do a one-click cross-chain transaction that can swap, bridge, and execute a transaction. Why it's so important is it solves a gargantuan fragmentation problem for any application building or DEX or marketplace or wallet or anything at all that's doing anything on chain and wants to say, hey, any user, you can connect and you can transact and we can monetize you. So we can facilitate very smooth commerce on chain. And so Trails is doing really well. We're really stoked about integrating. It's free to integrate. Anyone can plug it in. It comes with an intent-based backend. It also has a really robust SDK, even like a widget library. So yeah, we're going to keep leaning into that. And the goal for Trails is really to expand and have as much network and chain coverage as possible, including token coverage with low latency and low fees. And that's pretty much it. Trails is built on top of Sequence. And Sequence is on-chain building blocks that are of modular components. So there's a lot of stuff that we're working with Sequence. One of the things we like to do with Sequence is really work with the customer and then go backwards. It's like, what do you want to do on chain? How do you want to connect the Legos? You can use Sequence guaranteed because there are so many of the Legos. It's a matter of how you're looking to compose and solve the complexity. What's your flow? We have a lot of really cool things that are coming out. So it's about, for us, it's a really like since the beginning of our company, it's always been utility and activity on chain, on many, many chains. And so again, there's a lot of cool things that we have in the works with Polygon even before and with Polygon. So those are two efforts plus OMS. So no shortage of exciting things to work on this year.
Gentlemen, Neo Finance is happening right in front of our eyes. Congratulations again, Mark, John, on the acquisition, Neil, Peter, on the partnership. Guys, thanks for joining us today. It's been awesome. And again, congrats. This is awesome.
Super fun.
Thanks for having us.
Thanks, guys.
See you next time. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Hey, yes, sir.
Polygon. Bullish.
Boom. I mean, yeah.
Crypto M&A is real.
Huge acquisition. Also, CoinGecko was up for $500 million rumored today, which is huge as well.
Oh, yeah.
This is great. This is a home state accepting stable coins for state payments. It's pretty bullish, man.
I love to see it. So following President Trump's signing of the Genius Act, Florida must ensure that our state is keeping pace with technology and the president's bold vision, says the CFO of Florida, proud to propose legislation that will ensure Florida is ready for the future of financial transactions with stable coins and that we are protecting consumers in the financial market. Yeah, look, I tend to think that this could happen behind the scenes anyway, but they are making it known that as the neo-finance movement takes hold, they will continue to support stablecoins and neo-finance payment methods at the highest levels of government, including the great state of Florida. We love Florida. We are from Florida.
Yeah, man.
We
it's
support
huge.
Florida's foray into the stablecoin space.
Yeah, I love it. And they also have this Bitcoin reserve coming as well, which I think is super cool. So Florida's taking a step forward in crypto, which is bullish. So maybe you can tell your girlfriend what industry you work in now.
She's known for quite some time, and she's also very supportive of Neo Finance. Thank you, Andy. Let's move right along. Let's see, what do we have coming up next? Maybe we'll get Andy's new girlfriend on the show sometime. See what she thinks about Neo Finance.
Yeah, which one is that? I'm not sure what you're talking about there, bud. Yeah,
your hell is that you don't quite have just one girlfriend.
Whoa. All right, moving on. XRP Sol Link gain Bitcoin level classification. Again, our friend Eleanor.
Not sure what's up with her profile picture there. Maybe we'll scroll down a little bit.
What's going on?
Here's an interesting section giving some token classification as non-ancillary assets based on their inclusion in exchange-traded products as of Jan 1. XRP, Sol, Litecoin, HBAR, Doge, Link are treated the same as Bitcoin and ETH from day one.
Which is certainly debatable.
If a token is the main asset of an ETF listed on a national securities exchange and registered with the SEC, it will not be required to file disclosures.
Other tokens are required to file. Interesting. Yeah. Okay. Well, that's kind of interesting, but unfortunately, these assets are different, and the 5 mentioned are definitely different than Bitcoin and ETH. They have a way different internal policy, way different hierarchy of command.
Actually, I would say that Dogecoin is pretty similar to
yes,
Bitcoin.
to Bitcoin. I agree with that, which is funny. Actually,
Link, Ripple, Solana,
Hedera.
But I mean, you also have to say Bitcoin and ETH are vastly different. Like,
yes, of course.
Dogecoin is more similar to Bitcoin than ETH is to Bitcoin.
I agree.
You could even say Litecoin is more similar to Bitcoin than ETH is to Bitcoin. But somehow ETH has been grandfathered in as well.
Yeah.
So I think it's bullish. These are companies that, look, you also had the XRP lawsuit with the SEC.
They won.
They won, so they're already moving in the right direction. The rest of these companies, I think it certainly behooves them to not be considered securities. Like we said earlier, it's okay if something is listed as a security. I think more companies are going to end up going public if they're deemed securities. But obviously, in the short term, it's a much easier path to kind of have your destiny wide open, not be pigeonholed into securities regulations with all the disclosures that are required. If you choose to become one, so be it. But we don't want anyone forcing anyone into securities laws.
Yeah. All right, guys. Last one on the U.S. politics arena here coming up. We've got a unveiling of the long-awaited crypto bill. As we know, we've talked about this kind of ad nauseum today. So, yeah, guys, I mean, there are certain status quos that are being developed as a result of this action in DC this week. There is, this is the passive yield for stablecoin kind of section that I was talking about, where banks are kind of getting a win if this stays as it is. So, look, guys, I mean, this is the regulation happening in the space. It's the regulatory clarity that as Americans you voted for, and we're going to have to figure it out. I mean,
there's a few more things that have come as a result of, they dropped the draft. So everyone was like, very, excitedly awaiting the vote and the markup that was going to happen. It was supposed to happen on Thursday. That's getting pushed back. But what we did get was the draft of the bill that they're going to end up marking up later in January. So there's a few things. Obviously, we don't know exactly which way they're going to fall on either side of the aisle, but I'll just rattle off a couple other key highlights that have come out of this draft. We talked about network tokens, presumably not securities if they are, linked to a blockchain and they're for the use of the network. Other things that have come out of this draft is a safe harbor for token distributions. Gratuitous distributions, airdrop-like activity are presumed not securities offerings, including liquid staking, self-staking, programmatic rules-based protocol rewards. So if a blockchain programmatically distributes its rewards, not a securities offering. If they're picking and choosing, could be a security. Disclosure instead of registration, meaning that you don't need to fully register with the SEC, but you do need an initial or semi-annual disclosure if you have less than $5 million raised, or if you average less than $5 million less in daily trading volume. This is obviously going to cover lots of teams. Failure to disclose can result in delisting. So that's pretty big. Centralized exchanges, in order for them to maintain their compliance in the US, they're going to have to be enforcing this. Certification path to end ongoing disclosures. Originators can terminate disclosure obligations by certifying that they meet some certain criteria.
Yep.
Explicit protections for DeFi and software developers. We saw Senator Cynthia Lummis talking about this earlier in the program. It recognizes decentralized governance systems as legally distinct from participants, and it protects developers and validators and separates them from the brokers. It expands AML sanctions and illicit financial controls. So it integrates digital assets into the Bank Secrecy Act. And so this was something that, obviously we want to be in compliance with the Bank Secrecy Act, but there was not a carve out for digital assets. With clarity, there will be. Two more. Banking and stablecoin provisions. It clarifies permissible digital asset activities for banks, and it preserves stablecoin holder rewards. And so we know that right now that is a very contentious point between the rewards for stablecoins between banks and stablecoin issuers.
Yes. All because of the yield.
All because of the yield. It's always comes back to the yield. The SEC and the CFTC will have a joint sandbox, a joint advisory committee on digital assets. This was something that the framework guys, Michael and Vance, were extremely, extremely excited about. This innovation hub where you can come into the SEC and the CFTC and you can tell them what you're doing, and they're not going to persecute you. You can actually talk to them and get their opinion about how you should be building a particular innovative financial product. The last thing here is bankruptcy and consumer protection. It explicitly protects customer digital assets in bankruptcy. Another thing that people were looking at here was whether FDIC would carry over to stable coins. We will see if that is included or not.
This is all so serious, man. It's like the era of the Wild Wild West is coming to an end for the better of everyone, for the legitimacy and establishment of this industry. But man, we didn't none of this was even a thing a couple of years ago. It's just crazy to see how we've came so far with regards to, let's take ourselves seriously. Let's implement the rules that exist, and let's build this thing from the ground up with the people that matter, with the governments, with the financial institutions. It's kind of gone from this anarchist mode to this appease mode.
Yeah. I mean, as we have grown bigger as an industry, I think it was inevitable that, there was always a slim chance that digital assets, Bitcoin was going to revolutionize and overthrow the legacy financial system. As I grew older, I started to grow out of that mindset. I don't know about you, but I started to realize that was a very unlikely path for this industry to go. A much more likely path was that we were going to integrate rather than revolt against.
Correct.
It's going to be a more, dual path, back and forth integration process. And that's what we're seeing here today, which ultimately means that people are going to put rules out there. They're going to go through the process. If they get instantiated into laws, as an industry, we're going to have to follow the rules for better.
Yeah, we are. Guys, follow the rules, stay long, stay strong. We'll see you tomorrow. Big day tomorrow. I think the market is ready to go, man. So let's see where we end up. We've been waiting for this move for a while now. Guys, stay long, stay strong.